Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Please don't forget to like this video and subscribe to my channel. That would be really helpful. Thank you very much. So in today's video, I'm going to be talking about what happened in the markets last week. And I'm also going to be talking about how our portfolio fared overall. So to get things kicked off, our portfolio tracked slightly behind the S&P 500 and the NASDAQ last week. It was down about -2%. If we compare that to the S&P 500, which was down about 1.6%, and the NASDAQ was down about 1.8%, we were slightly behind both of those indices. And the main reason for that was the fact that crypto was down quite significantly last week. And it's still quite correlated with the overall NASDAQ and technology stocks at the moment, as we have a lot of fears around the Russia-Ukraine escalation and also the potential threat for interest rates to rise. So this caused a relative underperformance for our portfolio. However, from a year-to-date point of view, we are still doing better than the NASDAQ 100 and also about even with the S&P 500. So although it's not an ideal result, I'm pretty confident that our portfolio is in a very good place to do well in 2022 once we get past some of these hurdles that we have in place at the moment. It's a very volatile market at the moment. I've also been trying to do as many hedges as possible during times of volatility, as you'll probably be able to see from my portfolio. This helps to dampen some of the effect of that volatility. And I've been shorting some of the indices such as the NASDAQ, as well as the SRTY, which is the Russell 2000 small cap indices. And I've also been doing some small positions on crypto positions, which are weaker cryptos such as Dogecoin and Bitcoin Cash, in which also act as quite a good hedge if the crypto markets go down, because I consider those as much weaker projects. So to get started with our global market weekly update, I'm going to start off with the US. And last week, as I mentioned, the indices were generally down for the week. Many of the tech stocks performed the worst out of all of the stocks in the stock market, which is quite understandable due to the valuations being a lot higher and also the threat that increased interest rates has on them. And I've actually reduced some of my technology stocks within our portfolio over the last kind of 6 months, which has helped. And I guess in the US, there was 2 major themes last week. And the major themes were the Russia and Ukraine situation. So earlier on in the week, it was actually said by the Ukrainian president that he actually expected the invasion of Russia to be quite imminent. And I think he actually said Wednesday as a date which they had heard from Intel that Ukraine was going to be attacked. This was then followed up, I think it was on Tuesday, where Vladimir Putin, which is the president of Russia, he then said that they plan to withdraw some troops from the border of Ukraine. And that they were finishing up some of the drills. And then he said that they were open to diplomatic discussions, because a lot of this tensions come from the fact that Russia do not want Ukraine to join NATO, and they also want some of the US troops to withdraw from Eastern Europe and the Balkans region. So tensions have been particularly high. And then towards the end of the week, we heard of some shelling that was happening in a certain region of Ukraine, in which the US has said that this is a false flag, and they think that Russia is doing this in order to be able to justify attacking Ukraine. And that was the situation really there. And there was more and more threat as the week progressed that there could be an imminent invasion of Ukraine. However, this was slightly overdone by President Biden in the US, who said this invasion is imminent. And Putin was saying that it wasn't imminent and that they were prepared to have diplomatic talks. And we had some diplomatic talks between President Macron and Vladimir Putin, which seems to have helped things slightly. And now there's talk of President Biden having a meeting with Putin, I think today, in which they hope to make some ground to try and ease some of that tension that's going off in Russia. Of course, any threat of invasion or war is going to have a negative and a volatile effect on the stock market. So the stock market is quite sensitive to that news at the moment. So any news that comes out about diplomatic discussions that have taken place are going to move the market. So our portfolio is positioned accordingly with certain hedges. So it's important to know that the Russia-Ukraine situation has been ongoing for many years. However, obviously, with the troops being deployed to the border, this has actually escalated the situation somewhat, understandably. However, you've got to consider the fact that it would be in Russia's best interest to invade quickly and as a surprise. Because surprise in war is one of the biggest artillery that you can actually have. So the fact that invasion hasn't happened yet and that they are having diplomatic talks, to me is a good sign. And it shows that they are open to these diplomatic channels. So let's see what happens over this coming week. There was also some interviews with James Bullard, who is the St. Louis president of the Fed, who said in interviews that the policymakers from the Fed were surprised with the inflation figures that had come out recently, and that it was imperative that they got this under control, and it was very important to keep the Federal Reserve credibility to reduce these inflation rates. He also said that it was quite likely that he expected the Fed to, by July, increase the interest rates by a whole percentage point. Obviously, the markets are pricing in this, and that is the fact that the reason why the technology stocks fell quite a lot last week as well, because they are starting to price in these increased interest rate hikes. However, we will see what happens in the next Federal Reserve meeting. There was also some mixed data from the US, with the jobless claims actually increasing for the first time in quite a while. However, conversely, we actually did see retail sales actually increase by about 4%. And a lot of this could be attributed to the fact that inflation has started to set in, and that companies are rising their prices in order to be able to keep the margins. So some of this could be to do with increased prices because it isn't inflation adjusted. As we move on to Europe now, and last week the European indices were also down like the US. And a lot of that was to do with a few discussions that actually took place throughout the week. So one of them was Christine Lagarde, who is the president of the ECB. And what she said was that she expected monetary policy to only be adjusted slightly over time, and that they were going to be led by overall by the data. Conversely, there was also an interview with the chief economist of the ECB, which is Philip Lane, who he said that he expected stimulus could be withdrawn sooner than expected in order to combat inflation. And he also said that he expected that inflation wasn't going to come down to the 2% target for at least a few more years. And obviously this had some effect on the sentiment overall in the market. And if we stay on the inflation theme, the UK actually announced that they had experienced a 30-year high in terms of their inflation numbers. And this led to a lot of speculation throughout the market that the Bank of England could decide to increase the interest rate again for a third consecutive meeting. However, there was some really good employment data in the UK, which showed that unemployment had gone down to 4.1%, which shows a very robust economy and shows also the fact that there is a record amount of open job roles at the moment in the UK. So it shows that overall it's a very healthy economy. As we move on to China now, and last week the market looked really good. And this is because of a lot of supportive monetary policy that's actually coming out of China. And the Chinese Premier 𝘃𝗶𝗃𝗀𝗃, he stated last week that the Chinese government planned to support as many businesses as possible and put in special measures to support the economy. They plan to cut overall corporate tax, which is good for companies in China as they look to try and grow their businesses. And they're also planning to do, the Bank of China is also planning to do a very loose monetary policy in order to stimulate the economy overall in China. So there's some very good signs in China, and I'm actually expecting our Chinese stocks to perform really well this year after a really tough year last year, and then being at very good valuations at the moment. We also saw some really good data in China around the CPI inflation and also the PPI inflation, which is the producer purchasing index, and this had shown that inflation was lower than had previously been expected, which was very good overall for the markets in China. As we know, Chinese companies listing on the stock market in the US has been a contentious subject over the last 6 months to 1 year. And we had a breakthrough last week in which Meihua Medical Technologies company will become the first company to list in China since that ill-fated DD IPO, which happened about 4 or 5 months ago. There is a lot of now very rigid regulations in place from both sides, from both China and from the US, in which Chinese companies that want to list in the US have to first get approval from the Chinese government before doing so. So this is a good sign that we could see some more Chinese IPOs in the market in the future in the US, which I think will be generally good for stocks and the economy. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week in our portfolio was GPI, which is up about 6.3% overall for last week. And secondhand cars in particular are doing very well at the moment, and that is because of the supply chain bottlenecks that had been in place and the slowing down of manufacturing of new cars. The second best performing stock in our portfolio last week was Dana Group, and Dana Group is another provider of car parts, and they were up about 5.8% for last week. The third best performing stock in our portfolio last week was Leidos Holdings, and that was up about 4.5% last week. So let's talk about crypto now. And crypto, again, an extremely volatile week, but overall it finished down for the week. And we actually saw Bitcoin decrease by about 8% last week, and Ethereum also by quite a similar number. And again, the main reason for this was very similar to the stock market. We saw some the issues with Ukraine and Russia, which weighed on risk on assets, which crypto is one of those, and also the fears around those interest rate hikes is having an effect on crypto at the moment. There's also some regulatory discussions also going on in the US, which puts a little bit of strain overall on the crypto industry. However, we did see some good news, and Georgia, the state in the US, have decided that they are planning to put in some incentives overall for Bitcoin mining, which is good overall for the ecosystem. And we also saw Ukraine make Bitcoin legal in the country, and also other cryptocurrencies as well. So this is just showing more countries are having a pro crypto stance, and this is on the back of what we heard from Russia about a month ago, where they have decided that also crypto is going to be legal in the country. So this sets really good benchmarks for the rest of the world. We also saw a very interesting news story in terms of JP Morgan. And as you will know, JP Morgan has been a massive critic of Bitcoin and crypto overall for many years. However, we have started over the last year or so to see a much friendlier stance from JP Morgan, as they want to get more and more involved in the industry. And last week we saw JP Morgan become the first bank to be represented in the metaverse, and they are now open with the JP Morgan Bank on the Decentraland network. However, we did see some negative news from OpenSea, which is one of the largest NFT marketplaces in the world, and they actually experienced a hack in which many users were actually hacked of the NFTs. And this obviously caused a lot of ripples in the overall industry, but also had a big effect on NFTs as a whole. And what they are saying is that it was targeted phishing attacks and that they were investigating it. However, there are a lot of white hat hackers who are saying that it was an issue overall in the code of the smart contracts. So we will see, after an investigation has happened over the next few weeks, what the outcome of that was. There'll be a lot of concerns at the moment that Bitcoin has gone under that $40,000 mark. And right now, at the time of this video, it's at about 39,300 or so. And however, I'm not extremely worried about the situation at the moment in crypto, and that is because there is a lot of correlation at the moment between the general stock markets and what's happening overall in the economy, and political uncertainty in Ukraine and Russia, and those interest rates that I mentioned before, that the market has become correlated. However, I do see over time this correlation will lift, and we are still seeing really good news stories over the weeks and months, and some of the on-chain metrics are also very positive at the moment. So we might have to ride through some of this volatility for a short period of time. However, I'm still confident in the overall outlook for crypto over the next couple of months once we get over some of these speed bumps. Thanks very much for listening to my video, and also for your patience over this very difficult market conditions. I will do my best for you to manage the volatility as best as I can, while keeping a strong runway for future growth. However, it's very important that you stay patient. It's a very difficult market to manage at the moment, on which I am doing my best. However, I'm very confident overall in my long-term strategy. And it's very important that you stay in the market, because timing the market is much more important than timing the market. And it might seem that all the news is negative recently, but we do go through periods of time, and it is a real test of your ability to be able to withstand some of this uncertainty that happens in the market, in order to be able to come out of the other side and be prosperous. Please also remember to join my Discord group. There is a great bees community where we have regular discussions about what's happening in the stock market. We talk about crypto, and many people ask me any questions that they want and I answer them for them. So please join our Discord group. The invitation is below in the comments section. Thanks very much and have a good week ahead.